Okay, just basic reporting. I'm not going to go into this very thoroughly, but your balance sheet, right? Balance sheet, reporting basics 101. Your balance sheet is just a snapshot in time of where you are for assets as an association. I mean, you look at your checking account, what's in the checking, and you look at what's in your reserve. Your liabilities really, for an association, that really isn't much to look at, to be honest. Your liabilities might be any prepaids that you have, or might be any bills that are still in process of paying, right? You're not really gonna have a lot of liabilities. Loans, right? To a gentleman back there, that might be a significant one on there. But really your balance sheet is just a tool to tell me where I am as an association for cash, right? I really look at it that simply. Income statement, this is probably the second most important financial statement that you should be familiar with. It's just a simple snapshot of what you're taking in and what's going out for operating, right? The one thing I've criticized, honestly, with Sharper and our financials for 9 years now is I hate how our operating and our non-operating makes it a little confusing, right? Because the non-operating makes it look like you might have years where you spend a lot of money out of your reserves, more than you put in, right? And that's okay. We just looked at the graph, right? But that makes it look like at the end of the day, oh my God, we're $500,000 over budget. Don't look at the non-operating. When you look at an income statement, just look at the operating. Do me a favor, and don't confuse yourself. Just look at what came in for operating and what goes out for operating. That's how you're performing, right? Good or bad. Cash, accrual, modified. We're not Fortune 500 companies, other than Kaufman, which has a very detailed and complicated budget. For an association, I don't understand why you even want to look at accrual accounting. I'm just going to be honest with you. Why? Tell me what went in my pocket for dues and what's going out of my pocket, and that's how I'm performing. But I think everyone understands that cash is what goes in and what goes out, period. Accrual accounts for what you're supposed to take in dues, right? And then what goes out in the months that it was accrued, not in the month that it actually went out. So again, my contention is why look at it that way for an association. And then modified accrual is just a combination of both. But I like cash personally. So that's the one nice feature of our financials on the website is you can run it in cash or accrual. I don't know why you would want to run it in accrual, to be honest.